There's a company in this batch doing 15 million AR, another one doing 9 million. Obviously, those two companies, everyone was all over them just with the pitch, and it is probably enough. Demo day is just done. I kind of maybe lost my voice a little bit, but we're here as promised, just hours later with Lori to tell you all about what happened and to take you behind the scenes. So let's dive in. Welcome back to the show. Lori, I'm happy you're here.
Yeah, it's cool. It's always exciting to see all of your videos, photos, opinions on demo day as well. So it'd be great just to start with what was that like this year? How does it differ from previous years, and what were you seeing across this batch?
Yeah, absolutely. So, as you mentioned, I go to demo day mostly to have fun and tweet and just enjoy the day, meet all the founders. So, if you don't follow me on X already, please go ahead. This is where all the behind the scenes of demo day happens, and you can go check out my post from just a few days ago. But overall, I would say in the big scheme, pretty similar to before. It's at the YC offices now. It seems to be where they want to stay. They tried in a bunch of different places. Now they really do it at YC. Pretty similar format. Opens at 9, pitches from 10 a.m. to 4 p.m. with a lot of breaks in the middle and lunchtime. But what's interesting is a lot of very small incremental changes and things you don't see if you go a few times. But if because I go, of course, every time, you see a lot of small things that are incrementally better. I give you two very small examples, and again, they're not much, but you see YC is really trying to make it better. One, there was the QR code at the entrance to check in much faster. Before, you just had to give your name. Here, you just scan your QR code and you get in. So, everyone saves time. There's no queue. And second, they gave everyone headphones so you could listen to the pitch without the pitch having to be blaring loudly in the event place. So it used to be the speakers would either you're on the first floor looking live, but if you're on the ground floor, you had the speakers and the pitches very loudly so everyone could hear. Now you just have the screens, it's quiet, and if you do want to tune in, you put on the headset and you can listen quietly so everyone else who doesn't want to listen can just network and talk. So, small incremental changes. Other than that, the energy is always crazy, always at its peak, always at its maximum. And it really is a moment where you see sort of all of the industry coming in and wanting to check in. So you have your regular YC investors that you see all the time. I'm proudly, included in that. You have some people who are just curious, and many of them, people who are like, I come here to get the pulse, to see what the industry is doing. Actually, many people who are not even investing. And of course, YC tries to not get that many people who are not investing, but people sort of, I don't know, find a way to get in, I guess. And they just want to get the pulse. And finally, and that's the most interesting, and I think we talked about this in a previous episode because I've seen this before. You have all of those people who say, well, I have a fund. I'm not usually doing YC, and I heard this again, at demo day this Tuesday. I'm not usually investing in YC, but we're missing so many good deals that I actually sort of have to come here and maybe try to do a few investments. I even heard at demo day someone saying it's not in our focus, so I'm not allowed to invest in YC right now, but I'm planning to sort of do it anyway and tell my LPs, oh, you know what? You don't know what's good for you. Voice is good. So trust me, I know I'm not supposed to, but I actually sort of want to and have to. That was so interesting. Of course, I said, oh, can you see this? Can you say this on camera? He was like, are you nuts? Like, I'm never going to be on the record. So I'm just giving you the story. But so yeah, that was YC. I think we're going to talk about the demos as well. We're back with hardware being presented, and that's really cool. Overall, just an amazing day.
Yeah, so just on that premise about people coming into YC to perhaps look for those investments to come to demo day to invest, be interested just to hear about like the actual timeline of when you first engage with those YC companies. Obviously, YC as each batch is 3 months long. So are you meeting founders at week 2, week 8, or do you wait till demo day? And then within that, like, how do you look at those conversations with founders? Like, if you're meeting someone really early on, do you want to check in with them again to check traction? Because everything obviously leads into this demo day, but obviously, as we know, some of the best deals are not still on the table when it gets to demo day. So if you could just kind of explain a little bit about that timeline and the mechanics of that.
Yeah, absolutely. And we've had so many conversations with this. I was at a speaking at an event the day before demo day. It was the YC pregame, and we're a bunch of YC investors. And so I want to preface this by saying we there's the hot companies at demo day, but we don't know which company is actually going to win. So we think we like one that's quite hot, but maybe it's actually going to tank, and a company that's completely still raising and open at demo day is going to be the winner. I'll give you an example. Motion, so not Notion with an N, but Motion with an M, was in YC in 2020 and was not sexy at all at demo day. They didn't raise, they just had pivoted, and they were still figuring things out. And they just announced a raise last week at $550 million valuation. And so, the unsexy at demo day could become the sexy and vice versa. Now, that being said, it is true that sometimes some rounds at demo day are closed. By the way, some of the rounds at this demo day who were closed, many of them opened up an extra tranche of fundraising. And so most of the time you're still able to get in. It's only maybe the valuation is slightly higher, which if you believe it's going to be an absolute winner, like a decacorn at 10 billion plus, doesn't really matter. You probably should be backing them anyway, hopefully. That being said, yes, we are in a position where we talk to founders sometimes very early. Actually, because I do so much content, this podcast included, the other YouTube channel. So, okay, let's do the advertising. So if you're not yet subscribed to this podcast, please do so on YouTube. You can turn on the notification bell on your favorite podcast platform, leave us a 5-star review. And then I have a solo channel where it's just me talking about stuff. And so just search Gabriel Jarrison in the YouTube search bar and you can find me there. Okay, so because I talk about YC there, I have a video of like how to make the perfect YC application video, stuff like that. So many entrepreneurs know me from even before. And I get tons of messages like, oh, hey, Gabriel, thank you for your content. It helped me. And now I got into YC. So many times I'm very early knowing who they are and the fact that they're in YC. So that being said, I'm always happy to talk to them, always happy to help them, but you don't want to talk to them before they're ready. Like you can't really look at the pitch and look at the startup week 2 of the batch because they haven't gone through the process of becoming, a YC company. You need to give them time to get the traction. As we've discussed here extensively, strong early traction is a very important indicator for me, and I think it's a very important indicator in seed investing to know if the company is going to do well or not. And 3 months makes a big difference, especially in YC. It's this pressure cooker, and you can accomplish a lot of things in 3 months. Some companies make millions of dollars in revenue in those 3 months. So at week 2, it would be unfair to judge them. Of course, I know that, YC knows that, and the startups know that. So when I do talk to them, it's not about judging them to invest. It's about first helping them. And, I want to generate some goodwill. I want them to explode and then be thankful that I helped them and be like, oh, Gabriel really helped us from the beginning. He's a great guy. That's the goal, paid forward. And of course, and you touched on that, startup investing, we're taking decisions with money on very little information. And so this is just another touch point, another information. We can see how it did evolve and how fast during the batch. So that's the more information we have, the easier it is for us to invest. So interestingly, to some YC founders out there, I want to say it's easier to get a check from me and probably from any investor if you've already talked to them prior, even if it's not a fundraising conversation. And this happened to me in this batch. I talked to someone a month before demo day. I actually thought it was a fundraising conversation. But at the end, it was like, no, we're not ready yet. We're still going. And then a month later, the progress were spectacular. And so then I, was very interested in potentially investing in them because I had all of, that 2 data points instead of 1. So yeah, that's how we do it.
And so, as the startups go through the accelerator and then they pitch on demo day, like how much of a difference is that pitch making? How important is that for startups to secure that investment? Is it just the fact that there's now a lot of investors in the room? Because it's obviously well known that they have like a minute to pitch, and they're kind of
Yeah.
effectively just explaining one statistic or one problem or one piece of traction. So, like, is demo day sort of kind of just for show in a way, or is it actually important as part of the journey for startups?
Yeah, is demo day for show or is it more? I think it's both. I'll tell you so I think the 1 minute pitch is probably more to generate the interest, to spark the conversation rather than actually making the deal. Now, of course, it depends. When you're the hottest company in the batch and you come in and you announce, oh, we're doing 9 million, 15 million in ARR. There's a company in this batch doing 15 million ARR, another one doing 9 million. So obviously those two companies, everyone was all over them just with the pitch, and it is probably enough. For the rest, for the normal people, and there's no shame in not doing 9 million at demo day. That's very rare. I think it's to spark the conversation. Now, that being said, like I said, people are always sort of surprised or impressed. Like, oh, is it like 10 a.m. from 4 p.m. all the pitches? People are like, wow, that's a lot. That's crazy. Actually, probably more than half of that time is breaks. There's a lot of breaks, and they're long. It's like 45-minute break, an hour breaks, so that founders and investors can actually talk. Again, so the pitch is to sort of spark the first conversation, and then you go out, you find a person. Almost everyone now at Demo Day is wearing some merch with their company name on it, so you can sort of find them easily, hopefully. And now also YC launched a chat. It's been 2-3 demo days where there's a YC app, and you can just chat, say, hey, where are you? Like, I use this, I wanted to narrow down on a founder. There's thousands of people. You say, oh, where are you right now? I'm wearing like a white t-shirt. And what about you? And then you meet like this. But I saw several, and there's one that I captured on video and tweeted, several deals being made at demo day. It's the famous handshake deal, but also some emails. You shake on a deal, say, okay, I'll do it, and then you confirm on your phone from demo day, saying, yes, I'm in for this amount at this valuation. So in this regard, it cannot be just for show. It actually works. Investments are being made. And I talked to many founders who said, and I said, oh, is your round done? No, we're still raising, I don't know, 100K, 400K. Okay. And I tell them like, oh, are you hoping to get done by tomorrow? Because of course, when you pitch, you get all the intros and you schedule the meetings for the next day. And many of them told me, no, I'm planning on being done tonight. That's not that they're it's not maybe it's wishful thinking. It's not that they necessarily get there, but if they can, they're going to try to push you. And remember, YC trains them to be fundraising machines. They're very good at fundraising, so they're pushing you. Okay, you want in? Can you give me the commitment right now? Let's do it. And you're going to sign on the next few days, but it's the handshake deal. You write, I'm in for this valuation in the email, and it counts, and then you have to follow through, otherwise you get a bad rating. So yeah, it is a show, but it is also really useful. Yeah.
And what are those conversations like prior to demo day? Like, is it maybe three, four, five times that you're going to speak to a founder that you're like especially interested in, so that by demo day you kind of confirmed it? Um, Obviously, like you want to be competitive, you want to be early in those deals for Lobster Capital. Like, how are you thinking about that? How are you looking at that? Or is it just so variant depending on who the founder is and what the deal is?
it it's not too variant, it's not too different. Most of the times it's one conversation. Some hot deals in this batch. There's someone, I think it was already talked about on LinkedIn, who the first, I think it's the first 12 or the first 19 meetings, maybe it's 12. The first 12 meetings he had were all yeses. The first 12 investor meetings, every single one of them said yes. And so, because the company is pretty exceptional, and the founder is as well. And so if you need 3 meetings, like the round is gonna close in. So okay, some there's sort of a YC best practice recommended date of you starting your fundraising, and you don't have to follow it. What YC doesn't forces you to do anything, but they say, okay, you should start having investor meetings at that date. Of course, it's like a week, like a week or two before demo day, so it starts on Monday. But then some founders, they say, oh, we can have some very special conversations with some very special people just a few days before, like the weekend before, Saturday and Sunday, because YC, it's 7 days a week, you work Saturday and Sunday. And some people were like, oh, but we're gonna start a little bit before as well, like Thursday and Friday, etc. So anyway, like I'll tell you, in this batch, I had a call on Monday morning from the first day of fundraising with a hot startup that I thought was very interesting, and they just had a bunch of meetings on Saturday, Sunday, not even that many. Monday morning, it was, I don't know, like 10 a.m. or something. That's it. The round was full and oversubscribed and closed. So, just to say that if you want to have 3 meetings, it's very unlikely you're gonna be able to invest. That's the YC. And it's not even like a fear of missing out. They don't even do it on purpose. It's just the companies are so good, everyone's saying yes, and they're gonna just be ahead of you if you take too much time. So when you do meet a YC startup, you should probably be you should be in a position where you could probably give them an answer pretty quickly, like in, I don't know, 24, 48 hours. And it's probably just after the first meeting. Now, that being said, those companies publish stuff on the YC page. They have a launch as well, pretty similar to how you would launch on Product Hunt. And so you can sort of do your own research ahead of time, to come prepared with the right questions. But yeah, it's very rare, very unlikely that you're going to meet 3 times. And of course, there's sort of this adverse selection. If you only invest in companies that do meet you 3 times, it's probably the companies that did not get investments from the fast moving VCs like Lobster Capital. And so it might still be a great investment, but it's a company that probably everyone else said no to before you.
And part of that as well is obviously you're continually in contact, like over email, text, whatever. So there is a decent amount of feedback within there as well. I think one of the things that you mentioned about traction and demo day this time was obviously the startup that's been doing 9 million. This is now a Lobster Capital investment. Just kind of want to hear that from your perspective because it's a huge amount of revenue or signed revenue to be getting coming to demo day with. Like how early on in the process of that startup going through YC are they collecting that revenue? Are they coming into YC already having revenue? Because I guess that's where you start to speed up your process a lot as you're getting these updates from founders about their increased traction, week by week.
Yeah, absolutely. So, we did invest in a company doing over 9 million, and of course, it's impossible to. I shouldn't say impossible, but anyway, this company didn't start from scratch 3 months ago. Like it's a slightly older company. That's exactly the strategy we like at Lobster Capital because it's more ahead of everyone else and de-risked in a sense, and just growing quickly. But it so if we go back, we believe strong traction is a great predictor of future success, and many founders at 9 million AR, or however how much they were when they got in, 4, 5, 6, or 3, wouldn't want to be doing YC, which I think is arguably potentially a mistake. I think it's always useful to do YC even if you're further down the road. But so we think it's really de-risked. It's also a matter of, at this stage, you have evaluation as well. Like, it depends. If it's 9 million AR, but it's $1 billion valuation, it's not as good an investment as if it's a smaller valuation, of course. So this depends. I'm not revealing anything here. So, what's interesting is this company in particular. I don't know. I think you might wanted to go in some details because it's pretty unusual. It was very different than anything else from the batch, and it was quite overlooked, I think, by a lot of investors including myself originally. At the beginning, I was like, well, okay, well, whatever, because we don't know about the revenue, and then you realize it's working so well. And so I think many investors just didn't sort of look at them seriously. But at demo day, they presented and they told their numbers. They said, oh, this is the revenue we have. And they instantly became the team that everyone at demo day wanted to talk to, everyone. And of course, just like I mentioned previously, they were already closed with their fundraise. They probably are opening another tranche at a higher valuation, etc., etc. So yeah, that's interesting. I mean, YC also now has a how is it? What is it? A conversion rate tracker for investors. So if you take 100 meetings and you just make one investment, then it's like a 1% conversion rate, and they say that to founders to say, hey, you should not prioritize that meeting because there's just 1% chance that you get a check. Where if you take 10 meetings and do 5 checks, they say, oh, it's a 50% conversion. You should prioritize that. And so it changed the game a little bit, where I used to talk with all the batch. It was a catch-all, just to say, let's hear everyone out. And now I don't want to do that because we're very selective at Lobster Capital. We write 3 to 5 checks per batch. We wrote 4 checks in this batch. And then if you talk to 150 and write 4 checks, it's going to hurt your thing. So that's added a level of difficulty. I have ways of finding out what's going on everywhere without necessarily talking to them. But it also changed the game a little bit. All of this is, such a very interesting, moving ecosystem. Yeah.
And so, yeah, we could just maybe talk about some of those investments that you did make. This one in particular that we already mentioned is definitely super different from the batch, which was quite dev tool heavy. Just kind of want to think like holistically about the 4 investments you made this batch, the growing Lobster portfolio. Like when you're analyzing these companies in the batch, like how much are you thinking about your existing portfolio? How do you think about portfolio construction? Because obviously for a fund like Lobster Capital, it's somewhat dictated by the startups go into the batch. There's been heavy concentration with developer tools, heavy concentration with kind of AI for X kind of tooling. And so it's interesting with these investments that you've gone for one in the defense space, you've gone for one in the kind of consumer space that don't necessarily fall directly in line with what is the majority of the batch. Is that driven just by the startups themselves? Is that driven by portfolio construction, or is that driven by something else?
I love this. I love this question. That's really cool. So we're Lobster Fund One is almost fully deployed. We're gonna have around 40 startups in the portfolio, and I think now we have 31, 32. So we're really towards the end. One thing I want to mention is the portfolio is doing amazingly. We have 2/3 of the portfolio growing 10% per month or more, with an average ARR average of $3 million. So it's just been insane. And something else that I started investing this from this fund in 2023. Even though in 2023 we were kind of slow, didn't deploy a lot because we hadn't raised a lot, because 2023 was a very difficult, a very tough time to fundraise. So we raised more and then deployed more in 2024 and 2025. But what I say sometimes to my LPs is, listen, I've invested the majority of the fund, like more than 75%. Still, all of those companies could go to zero today. That's obviously not what we want and not what we think is going to happen. But all of those companies could go to zero today, and we can go to the next demo day, like the one that has not happened yet today, end of 25, 26, whatever, and find the right company, and this single company could return the fund several times over. So even if, and of course, I don't think I did choose badly, but even if I chose badly up to this point, we're still in the game. We're still every demo day getting other like new shots. So that's really exciting for me in terms of portfolio construction. That's how I see it. It's every demo day I have the chance to find the company that's going to define this first fund, that's going to make the performance, that's going to change everything and honestly make my career as a VC, right? Again, I think there are many already in the portfolio that have very, very strong potential to do that, very good candidates. But again, assuming it goes all to zero, then so that's one thing I think about. Every time you invest in a fund, you have to think of, is this company able to return the entire fund several times over? Is this company has the potential to be a big, big, big winner? And that's how I approach it. That's how and that's what how the best funds do it, and that's where I learned it from them. So that's one thing for portfolio construction, and that's why I'm always excited to go at demo day. Is one of those, there's, so from 23 to 25, there's going to be I don't know, 10 plus demo days represented in this fund. And there's gonna be one of those, looking back, one of those days, it was just we were just on the heels of this demo day, but one of those would be the time where I've taken the decision that made the fund an amazing success. Again, probably defines my career, my future career as a VC. Now, on the YC DevTools, it's true that it's the majority. By the way, something very interesting, something that's been confirmed to me by Gary and by many people is the batch is very AI heavy, but that's not sort of a decision from YC. They didn't say to themselves, oh, we want to only do AI. YC has 25,000 startups applying every batch, and they're just selecting the best according to them. The acceptance rate went from 1.2%. I think the last batch was 0.8, and this one it was 0.6%. Like it's it's insane. It's divided by 2 in the last year. So and it's according to the partners themselves. What do they believe have the most potential? And of course, it's the age of AI, and AI has a lot of potential for a lot of things. But it's not, they didn't chose altogether to go AI heavy. And so there's many, 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 many dev tools that I see very similar to one another from one batch to the next, or even in the same batch. And I've had this discussion with a few co-investors recently in the YC batch, where you see a company, a dev tool, an AI thing, and there's like 3 of them in this current batch plus 10 in the last year. And so you said to yourself, well, yes, that's a good idea. Yes, there's going to be one or several winners in this space, but how do I know it's them? And again, going back to my vision of investing, if it's usually because they don't have strong early traction. So I'll give you a very specific example. I spoke at Demo Day with a very good team of founders doing basically, I think it's called GEO now. It's SEO for AI. How do you get recommended by ChatGPT, by Gemini, by Grok? So if people say, "Hey, I'm looking for a lawyer in New York," and it says, "You should hire Gabriel. He's the best lawyer in New York," right? There's been 20 companies in YC doing this, and again, some are going to be winners, but because none of them at Demo Day had 500,000 in revenue, 1 million, 2, 3 million in ARR, I don't know. I'm not able to see in the future who's going to win, because it's going to be partly a customer acquisition game. That like they all built the tech, and the tech is good, and probably some are slightly better than others, but they can catch up to each other, etc. But the one that does win the acquisition game, again, like that comes from 13 years of investing, 8 years of building startups before that. People believe build it and they will come, and that's not true. You launch and there's crickets, and it's sort of what's the word? It's crooked a little bit for YC startups because they have such visibility just from being YC. And I asked them, so I asked those founders, how do you get your customers? And they say, oh, we launched on YC, and now we have inbound. And again, that's like if you're unsophisticated investor, you're like, oh, they're getting inbound, that's great. But of course, if you have to be able to look past that and say, well, this is going to dry out. The launch is once, or maybe you can do it again in a year, like it's once a year, but that's not enough. How do you build a customer acquisition engine? And I've probably been repeating this, like Laurie, you're probably tired of hearing me repeating this over and over again, but that's the name of the game. Um, so I haven't been able to find someone with a customer acquisition engine already set up in this space, for example. And I told them like it you win if you're yourself recommended by AI. So I pulled up my phone talking to them and I opened ChatGPT and I said, what's the best tool or the best startup to get me recommended in ChatGPT? And actually a name came up. It's not a YC startup. And I said, look, guys, that's not you. That's why I'm not investing. And so I did not invest in them. Because, and by the way, I want to look into this startup. Like, that's really cool. Who are they? How did they do that? Um, so all of this to say, YC has, YC has 400 or 500 startups a year. So they don't care. They can take 20 and one is going to be the winner and YC does well and everyone's happy. We are very, very picky. We don't have as much money as YC, obviously, but also remember as an investor, like if you invest in YC, 1 out of 20 is the winner. So it has to be a 20x just to return your money. We're extremely, extremely, extremely picky. We want to find the winner in the space so that the returns math, the VC math works better for our investor. That's why we think we can outperform, hopefully, the VC index. All of those investors who do the spray and pray technique. I met an investor, he did 60 investment in this batch out of 150. So that's indexing, and that's okay. It's another strategy, but so that's why we look at everything, right? And by the way, like I'm saying all of this, I might be wrong. We'll see in 10 years. Like I don't want to pretend like I'm God, I can see the future. But we try to increase our odds with attraction. We try to increase ours by we try to only invest when sort of we know it's going to succeed. And even when we know it's going to succeed, of course, life is messy and sometimes it still doesn't work. That's normal. That's to be expected. But then if you haven't even figured out customer acquisition and traction, that's not for us. And so that's a lot of YC. That's why we say we invest in the top 2% of YCs. Some of them are more advanced, have figured something out, they have this little thing more, and that's where we play.
And I actually think that's an interesting like forcing function of YC as a program accumulating with demo day, in that actually the forcing function and the ability to deliver those like compelling 1 minute presentations is actually quite indicative of someone's ability to sell and convey information, which, love it or hate it, is pretty much the most important part of business relationships, especially in like a B2B context. Obviously, there's a lot of other ways to sell outside of face to face, but that ability is quite telling. Just like with that in mind, I'd be interested to hear about, as YC also seems to be growing a little bit in its deeper tech or harder tech startups, there are more demonstrations that actually tie to ability of a product, right? And the reality, the tangibility of a product. You invested obviously in a deep tech startup at this batch, more than one actually. So like, just walk me through that. Like, how is that different? How is the demo day for those startups quite different from, oh hey, we got 100,000 impressions on our website, converted this percent. Like that isn't the case if you're building missiles and diggers and all this sort of stuff.
Yeah, 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 absolutely. Um, it's so I used to. It's interesting. I used to not invest in hardware. Like if you go back, maybe even in this podcast, I'm not sure, but like 2 years ago, I would say, oh, we're only software investors. And of course, there's been many changes in the world. There's American dynamism. There's I'm based here now in San Francisco, and probably hopefully will end up becoming American at some point. And um, we need to build more stuff here in the US for energy, for chips, for defense, obviously. And so the world is changing. And I realized something, which I guess was, it's been obvious this whole time, but I realized something is when you're building software, it really is a game of customer acquisition, just like you mentioned. Oh, how many people are on your website? How many are you able to convert, etc. When you build hardware or deep tech, often if what you're working on is meaningful enough, it's more a question of, are you actually able to build it? But if you are, it's kind of obvious and 100% given, almost guaranteed, that people will buy it. And that's very, very different. So I give you several examples. We invested a couple batches ago in Inversion Semiconductor, trying to build the US ASML. So photolithography machines to create the most advanced chips in the US. And they want to do it better, faster, cheaper than ASML, which is the leader in the space, $280 billion company. They might fail, but if they do succeed, everyone wants the US ASML. And so it's all about how qualified and credible is the team. Do you think they're actually going to be able to make it? In the case of Inversion, they're extremely, extremely talented. They're probably some of the most, credible people to actually do that. And so same thing in this batch. We've invested in a company building, they sort of miniaturized missiles to shoot down drones. So today, to shoot down a $500 drone, the US can do it, but it's with a $100,000 missile. And their missile is shrunk down in size and in cost. It cost them $2,500. And they're going to sell it between 5 and 10K to the DoD. And so there's no solutions like this that exist. They've already talked to the DoD, who said, when can you deliver and how many? Like, we'll take 1 million. And it's just a matter of, can they actually build it so that it works, and can they build a lot of it? And the answer is yes. They have the best background and pedigree to build this. It's a crazy story. They drive to the desert every 2 weeks and just shoot stuff. And in 4 months, they went from nothing to an actual working prototype. That's really impressive. Like, some people in 2-3 years are not able to achieve this, and they did it in 4 months. And like, they stay in the desert for 2 or 3 days, and like, they shoot on the Saturday and overnight make some changes, 3D print in the tent, and then the Sunday they shoot again with the changes. It's insane, like the pace of this team. And so again, if they're able to build it, and everyone's pretty convinced they are able to build it, everyone's going to buy it. There's another company in this current batch that's building sort of autonomous submarines, like underwater drones. And someone told me at demo day, like, those two founders, just, those two 20-something-year-olds might be the only single reason why China does not end up invading Taiwan. Like, and maybe it's exaggerated, and maybe it isn't. That's crazy. Like, when you think about it, two engineers from YC. So yeah, we've been investing in that, and of course it's slightly different. I wanted to also, you said, it's, knowing how to pitch is important, because it's also knowing how to sell not in the hardware, deep tech, but in the rest of the startup world. That's true, but also you have to remember, YC teaches you how to pitch to investors. Sometimes some people are much better at fundraising than at actually selling. So that's also something and that's where I have an advantage of being a founder myself. Is, fundraising is great. You have to know how to do it as well. It's also a skill that it's good to have. But selling, again, is more important. I keep repeating to my startups, money from customers is better than money from investors. So sometimes they're very good at fundraising, but they don't have any revenue, any traction. Again, we go back to this. So are they really good at selling? Well, if you were, why don't you have more revenue? So, we go back to this all the time. And so with hard tech, deep tech, it's more about, are you able to build it? Then you evaluate the team. And if they are, you're going to be probably able to sell it, because people are just sort of begging for it, waiting for it. So I'll give you another example before we run out of time. I know you wanted to touch on them. Flywheel, from this current batch. I've also did some videos about them. A great demo at demo day. they're building Waymo for excavators. So excavators are notoriously dangerous. I think there's one injury per day in the US just with excavators. There's sadly been some deaths. It's, it's a very big, heavy machinery. It's used everywhere. Like you cannot go to any construction site without seeing one, and it's dangerous. And so they're retrofitting existing excavators with some hardware so that today already it's remote controlled, and so you can just go in a room where it's not raining. There's AC. You don't have to be in scorching heat or cold or wherever. You're here comfortable in the room doing the joysticks. But they're also gathering data, and they think in a couple months only, they can actually have some of the functions is going to be fully autonomous. So just, it's probably very unsexy market, but just a huge need. There's excavators literally all around the world, in every single country in the world, and they are compatible and retrofit with any excavator in the world. So that's, again, like, it's a matter of, can they build it? Can they, maybe they need to convince the first few to actually adopt it, but they already have convinced some. But then it's just such a better solution. Everyone's just going to adopt it. Yeah.
And how do you think about a deal like that a little bit differently? Like, is there, I guess for an investor like you don't necessarily come from those construction backgrounds. You're not driving excavators. You don't necessarily feel that problem like you might more readily with DevTools from an engineering background. So how, like, do you need to go and speak to customers? Like, if you have a great phone conversation or meeting with Flywheel, for example, like, where's the gap between what they tell you and kind of that investment decision? Is that in customer validation? Is that in research? What is that?
Yeah, I mean, for us at Lobster, it's always in customer validation. I always say, my opinion doesn't matter. So many investors, they invest, especially in the dev tools that we just talked about before, because they fall in love with the product and the idea. And sometimes I fall in love with the product and I want to use it, but it doesn't mean I want to invest. Like, I'm very happy to hate the product, but then there's a lot of customer validation, and I'm like, I'm gonna invest. I don't get it. It's not for me, but I'm not everyone. I'm not the target of every single product. And sometimes I love a product, but it doesn't sell, and I'm like, maybe it's just me, but people actually don't like it that much. So, and that's one thing. The other thing is you go from first principles. You look at Flywheel, to stay in this specific example, but it goes everywhere. You're like, I've never been on a construction site. I've never operated an excavator, but there's, again, millions of excavators in the world, active daily. There's injuries and accidents. They're, of course, costly and slow the work, slow everything down, but also they're hurting people. Like, that's the, and so then you have a technology that it's not that expensive, especially on the scale of a construction budget, that for sure makes your accident, your injuries and accidents go to zero. You're gonna, literally save people, and you can, go faster, because when there's an injury, there's, it has to be, the work has to be stopped for a few days, and etc. And there's penalties and fines, etc. So it's actually saving lives, but also it's just faster and better for everyone else. So sort of, I don't really need to be in the construction space. It's really first principle. It's like, hey, it's a solution that's not very expensive. Of course, if it was like 5 million, you're like, are they really going to buy it for 5 million? But it's not 5 million. It's cheap for them. It's faster. It's safer. It's going to save lives. It's going to make the workers happier. And at some point, it's actually autonomous. So there's a big shortage of workers in the US. You know that. Everyone talks about that on every podcast. There's a shortage of workers for AI, we need welders, we need iron builders, blah, blah, blah. We also need excavator drivers. There's not enough of them. Well, they're building autonomy. And of course, I asked them, like, when do you think you'll get there? And it's when you think. They don't know yet. But if you told me, oh, we think we'll be there in 10 years, I don't know. But they think, like I said, they're going to be there in a couple months for some parts, not for fully autonomy. And it makes sense. They're AI engineers. They're collecting a lot of data. And also, an excavator is pretty simple. It's not a Tesla driving at 100 miles an hour on the highway. It's like, turn left, turn right, dig, put it in the truck. Like it's kind of simple. So yeah, I first principle. Same thing for drones. Like I'm not in the army. I've never shot down drones before. I've flown a DJI myself, but that's it. But like if it's today costing 100 grand to shoot them, and they build it for 5 or 10, and it works, and they again, like everyone's gonna be all over this. Everyone needs this. So yeah, I guess that's how you do it. And remember, I might be wrong. Maybe it turns out in 10 years, like this company sucked and they didn't do anything. They have the potential of being a unicorn, a decacorn, which is why I invest. Not all of them is going to work out, and that's okay. The beautiful thing with VC is you can be wrong 9 times out of 10. If you're right and really right 1 times out of 10, or even, my portfolio is 40 companies. So if I have just one out of the 40, that's a decacorn, and all of the others, the 39 others go to zero, the fund is going to do great. It's kind of crazy to wrap your head around, but that's the world we're sort of playing in. Yeah.
And then just so lastly, like demo days wrapped up, you deployed these investments. There's now time, before the next batch. But even still from now, like what happens now? Like now that demo day is over, now that you've invested, like how do you look to add support? Do you just want to get out of the way? Or yeah, is that kind of up to the founder? I just want to hear your take on that, because this is obviously something that's increasingly talked about in founder circles, especially amongst YC founders who typically get to choose who they bring onto the capital.
Yeah, the best deals they do choose, and they choose. Money's irrelevant. I used to say that. Like, if you're at YC, you're raising 2 million, you're gonna get offered 5, 10, 15 million. So you have to, you're gonna choose. So yeah, YC is over, but it's only the beginning of the journey. I said it to so many people at Demo Day. Try to keep the pace of YC. Just try to keep going. And so on one side, the cycle starts again. There's the next batch that's starting in a couple days only. And so now, same thing. We, start mapping the startups and talking to them and trying to help them, etc. For the ones where it's over, I invite them on the podcast. First of all, we don't only have portfolio companies, but we try to have portfolio companies on the podcast so they can, share what they're building and why it's exciting, and try to see where we can add value. And it's true what you said. It is somehow depending on the founder. That's true. Some founders, they just they're cracked. They know what they're doing. They're running with it, and they don't necessarily need me right now. Also, by the way, like it's not only about being available the next few days. It's about being available for the next few years. So it's about building that relationship, that trust to say, hey, okay, yeah, sure, run with it right now. You don't need me. But let's check in 3 months, in 6 months, in a year. Like, I'm not gonna forget you. Like, those investments, it's not only about after this demo day now. It's like who I invested in 2023, in 2024. Like, how are they doing? So yeah, we support our portfolio. I actually just brought someone on who does that as well. So it's not only me. And it's always like this. We want to help our winners win even more, but we also want to help the ones that are struggling to turn it around. And thankfully that does happen. So it's not, useless to do it. And I'm lucky maybe that I failed so many times in the startups that I built, learned so much the hard way. So very humbly, with a lot of humility, I don't pretend I know everything, but I always try to offer my help, the lessons that I learned, and be like, well, have you tried this? Have you tried that? I'll give you a specific example. Founder we invested in, I think it's now a year ago, and they were just like this up and to the right. It was crazy, and then it stalled. They struggled, lots of churn, and then at that point, I was like, okay, do you want to talk? What's going on? And we talked twice. I don't know if it's twice an hour or twice 30 minutes. And the first call, I was like, it's not great. He hasn't figured this out. And I was just offering ideas. I was throwing stuff at him. I don't know what he needs, what he wants, and then we say, okay, let's check in 2 or 3 weeks, and checked in again. And the second time he's like, okay, we went back to everything. First principle, we have a plan. This is where and the second time I was like, wow, this company is saved. Like they, even if he hadn't implemented anything already, like I was like, okay, you know where you're going, you have a plan, you've really identified the problems and how to fix them. So yeah, that's what we try to do, even if it's not just after demo day. But we stay close. We communicate via email. We have a WhatsApp group of all the founders of the Lobster community where they can support each other. Most of them stay here in San Francisco, so we can just grab coffee, lunch, whatever. So yeah, it's only the beginning of the journey for sure.
Cool. It's a great place to leave it with what's exciting to come next from the Lobster portfolio, and then getting ready for the next demo day, which is in
Exactly.
December, right?
This Yeah, the cycle starts again. It's never ending. It's good. I like the 3 months thing. We just start and go again and keep at it. And excited to keep adding more companies to the portfolio of the first fund. Second fund is already, we haven't started deploying, but already killing it in terms of people who are joining us for the second fund. So I meant investor wise, also team wise, by the way. So very, very cool. Yeah, thanks to our listeners. Hit the subscribe button on YouTube and the notification bell. Leave us a 5-star review on your favorite podcast platform if you don't mind. You can also check out my other solo channel. I'll see you next week. I'll be back here with a YC founder. Laurie, thank you so much and talk soon.